All right, good morning, everyone. Happy Monday, December 23rd. And I'm pretty sure this is it, guys. The last pre-market prep session of the year. Let me check. Nope, I lied to you. I'll be back on Monday next week. So we got one more to get under our belt. But all right, guys, happy Monday, Merry Christmas, Happy Holidays. Personally, I'm not expecting too much from the market this week. And frankly, I don't want to focus too much on the market this week. Going to hang out with family, hang out with my dog, hang out with the wife, all of that festive kind of stuff. But looking out into, January, February of 2025, I think we find ourselves at a pretty interesting spot here. We had the big flush after Powell. We had a pretty good rebound there on Friday. And then looking at the rankings here, bigger picture meaning you look at the monthly charts, you look at your weekly charts. Bulls are pretty much, still in control. It's just in the shorter term, things got a little bit sloppy there. We are bullishly neutral. It's kind of how it grades out here. If we take all of the total scores from the indexes, right, combine them, put them in a percentage form, right now the indexes grade out is a negative 1%. So obviously the strongest possible would be positive 100%. So negative 1% for the indexes, negative 13% for the sectors. And then the Big 10, you're at about 50% of max strength. Big 10 being your Apples, your Googles, Broadcoms, all the above. The theme hasn't really changed. The theme being you look at healthcare, you look at the industrials, financials, energy, etc. None of them look good. The only thing trying to carry its weight, it's these 5 or 10 names. Big tech and a couple of semiconductors. That theme hasn't changed. It's just it's softened up a little bit. Meaning, you look at the sectors and biotech is still trash. Healthcare, energy, real estate, transports, etc. The best thing on the board is still those 10 names, but they're not as strong as they were. So short term, I think the market needs a little time to catch its breath. Bigger picture, nothing's really changed, at the moment. So I think it's a big spot for patience. And then a couple of levels for you, which, if anything, from a swing trade perspective, will help you be patient. On the old S&Ps here, I think you want to watch 5,800 and then 6,000. You got the 58, you've got the big 6. If they break 5,800, at that point, you're below the weekly 21 EMA. We go breaking below weekly support when we're already below the daily 21, we're already below the daily 50. We already got that big momentum break. They crack it below weekly support, in the short term could make for a bigger flush. If they can get it and keep it, and that's the key as far as any of these levels. Today, for example, they flush it down to 58. They maybe get it down to 57.90, but then they pop it right back above. It's not the break of support. Break of support is a below 5,800, to the tune of 20, 30, 40, $50, and they're not getting back above. So to the upside, if they can do that back above 6,000, at that point you're back above your 50, you're back above the 21. I don't think that so much guarantees a push back to a brand new all-time high. Could put us in a spot where anybody trying to short the break of the lows here might be feeling a little bit trapped. Could make for a good pop, back up towards those highs. Here's the key, though. I think mainly from as far as what's the next round of swing trades are looking for. In terms of the S&Ps, I don't think too much edge trying to call for direction. I wake up today and I'm buying a bunch of calls, I'm buying a bunch of puts. If we can't get out of the box here, right, they're going to dip it, they're going to pop it, they're going to do a lot of back and forth. If they can't break it below the 58, they can't get it back above the 6,000. I think it is a lot of noise. I don't want to go swing trading the noise. Alrighty, and then the QQQ, the one and the only. You want to watch about 520-ish, and then I think you want to watch about 506-ish. Or, forget the prices. Watch your 21 EMA and then watch the 50. If you're bullish on the market, best case scenario, QQQ's back into 521, 522-ish. Back above that 21 EMA, they hold it. 15-minute, 30-minute hourly buy signals. Then they got an easier path higher. If you are a QQQ bear, the few and the proud, you want a big break below that daily 50 around 507. At which point, now keep in mind, in the grand scheme of things, there's nothing bearish about this at all. They break that daily 50 around 507, might make for a trip down to the weekly 21. Can't stress enough, unless we pull back to that weekly 21 and keep on pulling back, nothing about that is bearish. We're in an uptrend, perfect structure, buy signals, score of 15. QQQ back into 505 to 500. If they hold it into, Q1 of 2025, I think makes for a really good buying opportunity. All just, conversation amongst friends for now. But yeah, a couple of levels for you. Bulls got to get it back above the 520. If not, they've at least got to hold that 507. Below that bad boy, looking for a pullback to the weekly mean. All right, so that is that on the indexes. And then a couple of things I do like. A few of which were long, a few of which I would like to get long. But keep in mind, as always, it really requires a good market. So if I'm on my best behavior, I hold off on buying more TSM. I hold off on buying some Nvidia, Google, until I'm getting a few buy signals on the QQQ. But one of the bigger things I'm trying to, knowing I could be early, also knowing the move could also, the move could never happen. I really want to be all over the SMH here. And I can't stress enough. At least right now, I don't think it's the kind of thing you buy. And you're looking for that big paycheck in a 2 to 5 day window. I'm looking at the SMH thinking, all right, they maybe get the party going into, could be February and March, maybe a little later. Now, sure, they do it earlier, then we'll take it. But as soon as my toss unfreezes here, I'll show you. Here we go. That's probably the 2 millionth performance problem detected of the year. But if you're a student of the squeeze, what do we know about the squeeze? It's the buildup of energy before what is usually going to be a pretty big directional move. All right, think of that like a coiled spring. Think of it like a rocket ship on the launching pad. Build up the energy, release the energy. It can make for a nice move. When they're going through that build up all the energy phase on 2, 3, 4 different time frames, all at the same time, and especially if they're on bigger time frames, those tend to make for the best moves the market has to offer. At the moment on the SMH, we have a weekly squeeze, a 3-day squeeze, a 2-day squeeze, and a daily squeeze. Now, if y'all look at the labels up here in the top right-hand corner, none of them are green, meaning we don't have any buy signals. We've definitely got the build up, the energy part of the equation. We want to take all those squeezes, combine them with a buy signal. 30-minute, then comes the hourly, then a 2-hour, 4-hour daily, etc. Again, I think we're early. And then also Nvidia. Nvidia's got to improve here. But one day down the road, they will fire. For the sake of conversation, if they do fire in the direction of the overall trend, and again, I'm not calling for, today, tomorrow, next week, just bigger picture one day down the road. If they do fire all these squeezes in the overall direction, in the direction of the overall trend, should, right, keyword being should, I think be a path into 300 plus. Now, for conversation's sake, let's just say, all right, that is the outcome one day in the future. Nvidia, Broadcom, Micron, TSM, LRCX, all the above. They're going to have a lot of wind at their back. So a little bit of a little weekend homework for y'all. Go look at the top 5 or 10 holdings in the SMH from about November of last year up until about June of this year. And off the back of that really good looking weekly squeeze in the SMH, you're getting what? A good 5, 6, 7 month window to look for upside in those SMH names. Nothing guarantees I go for it again, but I want to keep an eye on it. So that's one of the bigger things on the watch list into the new year. But looking at that daily chart, it's a face only a mother could love for now. -5 on the scoreboard, under the 50, under the 21. I know a lot of work to be done here. A big part of doing that work, I think, is getting Nvidia back on board. Now the major thing I want to show you here, also worth noting, Nvidia has a 3-day squeeze and a 2-day squeeze. But if we jump over here to the weekly, what I like about the weekly is, to an extent, it can tune out a little bit of that Monday through Friday noise. And for sure, from 150 back to 135, Nvidia's had some short-term noise. From that bigger picture weekly chart perspective, everything's still really bullish. You got good structure, you got good trend. Last week, a good hold of your 21 EMA. If they keep on fighting to keep it above that 130, then you take that from the inside out, looking for progress. Can they get a 30-minute buy signal going? Could they get an hourly? Can they get a 2-hour, 4-hour, etc.? From the ground up, we want to look for signs of improvement above that 130. And if they can do that, again, might be early trying to call for it today, tomorrow, this week, but into Jan, February, March, if they can hold it, if they can rebuild, if the entire group gets moving, brand new 3-day squeeze setting up here. Right now, the target sits around $1.62. If they ever turn the corner and break it out, we've probably got a target at that point closer to 170-ish. So keeping an eye on the SMH, keeping an eye on the Nvidia, and then the one we currently got in the stable would be the TSM. Got a February expiration 210-220. Yeah, 210-220 called debit spread. Looking for a move towards that 220, 225-ish. Now think about how I'm playing it here. And a big part of the way I'm playing it is the SMH. Bigger picture, I'm going to respect the fact it has a lot of squeezes. Shorter term, nobody's really home as far as a buy signal, which means I'm going to have a little trouble buying TSM calls that expire this week and trying to get some wind at my back. If I can go out into the end of February, I think I'm giving myself enough time there. So above 190, 185-ish, I'm going to hold it. Probably into next week. Think about buying a bit more. And then, looking for that 220-ish. So that's my take on the semiconductors. And then the other open trade we got would be GameStop. Not an options trade. We bought the shares. But I'm going to keep that above 28 and looking for a push out of that squeeze into 34 to 35-ish. Benefit of options is leverage. Benefit of buying the shares here is it's all pretty straightforward. Exit order under 28. Take the profit order around 34, and you let the bad boy work. But all right, guys, a few more for you. Another one I would like to keep an eye on. 2 more actually would be Google and Apple. And as of last Friday's close, I'm pretty sure Apple is. Let me check. Yeah, so out of these 90 different names, Apple ranks out number 1. And if you're keeping track at home, Pepsi grades out as the absolute worst. But yeah, Apple's sitting pretty with a 116 out of 120. I'm game to buy it anywhere above 245 ish. And selfishly, I'd like to buy it a little closer to that 245 ish. 4 hour squeeze setting up, a 2 hour, 15 minute, and a 5 minute squeeze setting up. The major thing I'm going to watch here, the weekly squeeze, which officially fired long last week. Well, no, you're not back here near the buy zone. You're closer to the target than you are to the buy zone. But bigger picture, in an uptrend, they break it out and fire a squeeze. Most times points towards some more fun to be had in the good market. So yeah, any dip above that daily 21, wouldn't mind getting me some more Apple there. And then Google, pretty much along the same lines. Anything above 184, 183 ish, I shall try to snag it. Beautiful weekly uptrend, going for the breakout. They just fired the squeeze. Now, if the QQQ just completely falls apart from here, that might be all she wrote for Google, Apple, all the above. January, February, March, Q1 of 2025 all needs a bit more bullish. I think you got to call for higher out of that big weekly squeeze. So the Google, the Apple, and then Meta. I like Meta on the 3-day squeeze, but only if they can hold it above the 3-day 21. Getting back below 600 might not be a big deal. Much below 580. Probably got to pump the brakes on that one in the short term. But I like it above support. And then Microsoft. Another one where I think you're a little early. But if you've got the personality where you don't mind sitting through some chop, little drawdown, giving a trade plenty of time to work. So long as Microsoft holds above that 425-ish to 420, I like the idea of slowly scaling into 480, 490, even a 500 call for March. Pretty straightforward. If they fire that weekly squeeze, right, and we don't know if they do, but if they do, they're taking out the all-time high. They're probably taking price into that 2.5 to 3 ATR extension. Well, by the time the squeeze fires, that target's probably going to be 490, 500. So yeah, if they break it out, if they fire the squeeze, which again we don't know if they do, but if they do, 490 to 500 should be, I think, a pretty realistic target. We go by the 500 call that expires this Friday. I don't think that trade's going to work. If we can go all the way out into March, I think a decent chance there. But all right, y'all, a couple of ideas for you. Check a few more things here. Tesla gapping up into 430-ish. I don't really have any fresh ideas as far as Tesla goes at the moment. And then GameStop, Nvidia, Apple, Amazon, not too much for you, but good hold of your 220. Yeah, we'll wrap it up here with Bitcoin. So I'm not saying it's a short. Bullish exhaustion is much different than something being bearish. Exhaustion means, yeah, bigger picture, it's still bullish. It's just shorter term, it might be a little bit more tired. Versus, hey, look at that thing. That's just flat out bearish. Seeing a few signs of exhaustion here. One good way to read it is just that MACD line here on our daily squeeze. They finally cross it positive. That kicks off a move from 55,000 all the way into 110,000. But notice, all the way back here around 80K, 90K, momentum begins to trend lower, while price continues to do what? That's a pretty big divergence. Momentum going lower. Price keeps on pushing, right, into new highs. Eventually, that negative divergence catches up to price. Right, they're pushing, then they get the quick flush. Now, they haven't taken out the entire uptrend. They haven't destroyed the structure. But in the short term, we no longer got that wind at your back that you had back here. We're no longer above our 21 EMA. 21 EMA is no longer pointing towards the upside. We don't have a buy signal. We don't have the perfect score of 15. We don't have momentum at our back. We don't have any lower time frame buy signals. Not saying you're short Bitcoin, but yeah, looking a little tired here. Typically from here, also in the context of a brand new daily squeeze, one of two things would tend to happen. Either one, they quickly get it back above that 21 EMA. They're cranking out 2, 3, 4 closes back above that level. Then you're getting a bunch of lower time frame buy signals. Then they're trying to turn momentum back in the favor of the bulls. They pull momentum back above zero. They got price back above the buy zone. Lower time frames all looking bullish. Yeah, then they can turn that squeeze back towards the highs. If they can't do all that from the ground up. And again, guys, bigger picture, nothing bearish about this. Could make for a flush down to the daily 50. In the short term, the level I think it anchored to, would be that daily 21 EMA. Take that level, mark it up, play the over-under game. And then for clarity, you focus on your lower time frame signals. Right now I can't buy it because we're below that 21 with a sell signal on the 2-hour and the 5-minute. Doesn't mean I have to short it, but I can't buy that. But all right, folks, that is my my story. I am sticking to it. So yeah, any questions, anything y'all want to look at? We'll hang out here for a few mementos. And then a quick reminder, quick heads up for the folks in my room. Being that we got a holiday week, bit of a different schedule. We're doing our pre-market session right here, right now. And then for tomorrow, I'm going to be live with y'all for an hour from 9:30 a.m. to 10:30 a.m. Central. So that'll be about an hour after the market opens. And then Wednesday, no session. Merry Christmas to all. Thursday, I'll be back for a pre-market prep. Which, you know what? I'll probably set up a YouTube stream as well. And then back for another pre-market prep on Friday. And then we'll get back to our normal schedule as the new year kicks off. But all right, let me get going through the chat and see what you folks have got here. Hey, what's up, Roman? Good morning. Good morning. RKLB and Roku. RKLB. So going back to the Bitcoin discussion, yeah, bigger picture, definitely bullish. All right, good trend going, made a nice move. But now in the short term, little signs of exhaustion. Right, big momentum divergence, negative shift. Now we're fighting back above that 21. But from the ground up, which is where we're trying to get the clarity, nobody's got full dominant control. 4-hour chart is neutral. 2-hour time frame is neutral. All right, bulls got the hourly. They got the hourly. But 30-minute neutral, 15-minute, 5-minute. With momentum below zero, on that daily squeeze, if I'm going to front run that positive cross, I'm looking for as many lower time frame buy signals as possible. Then I can look at the chart and say, all right, well, while that daily MACD might not be back above zero just yet, Everything else from the ground up, every other time frame, fully locked and loaded. That might trigger the push needed to turn that momentum. You get that going, then I think you're looking for the bigger breakout. But we had a trade in coin. Now, to be fair, I mainly took off coin because I was just losing patience. We had a 300 put credit spread, which I believe expired last Friday. So had we held it, it wouldn't have worked. But we're buying it up here. We're getting rid of it up here. Putting that trade aside, what we started to get was signs of exhaustion. Momentum crossing below zero. No more lower time frame buy signals. Then you're getting a few lower time frame sell signals. All that exhaustion coming through after a big push, you're taking price a little bit lower. So pretty good chance they're in that hurry up and wait phase. Above that 21, they probably never got 4-hour down to 5-minute buy signals. So the lack of those triggers keeps you out of the trade. Then you avoid that flush. So for RKLB, you could potentially avoid the same if they do break it lower by just waiting for a bunch of lower time frame triggers. And then jump into Roku. The rowdy Roku. All right, mark up the 21. The almighty over-under. And then 4-hour squeeze. I think for the most part, it's the same discussion. 14 out of 15, not bearish. I know we're 1 point away from being as bullish as possible. We're above the buy zone. Both of those things I love. I only want to buy a 14 or a 15 at that 21 EMA. So, I've almost got the perfect score right where I want it. But I don't have any trigger to buy that today. If I can't get a 5-minute, 15-minute, 30-minute buy signal, we're not pumping up here to 88, 89, 90 bucks. But compare that to a healthcare. I want to look for a buy trigger in Roku. Better structure at the buy zone, and I'm not even going to think about buying, something that looks like the XLV. So I like where you're looking in both there. I like where you're looking. Hey, what's up, Robert? Good morning, my friend. You got the Jan and Feb Apple. Ready to take profits and roll out. Yeah, so looking at Apple. There we go. Now, I think we can all point fingers at Pavel, the Fed, all the above. As traders, we love to point the fingers, but take a name like a Tesla, right? When the crazy action lasts, it's super fun. But that green line on my chart, that's measuring 3 average true range moves above our 21 EMA. Right? Anything above that level, not usually going to be all that sustainable. So when Tesla goes from, now mind you, we're looking at a weekly chart, but the rules apply on a 5-minute or a 30-minute. Anything above that green line, you got to look at that like a cherry on top. Meaning, in a perfect world, where am I buying a lot of Tesla and doing it with big size? Back here near that 21. Weekly squeeze near that 21. The move from that 21 to that green line, that's an easy part of that push. 7, 8 times out of 10, I think it's the only move you do get. So our goal should be, if you're a squeeze focused kind of trader, we want to make a living on that part of the move. Anything above that little green line, cherry on top. What I did way too much in the past was I'm buying Tesla back here. I'm up 5,000. I'm up 15. I'm up 20, 30. And then the unthinkable happens. Tesla pulls back. And now I'm only up 20. I'm only up 15. I'm at break even. I've got a losing trade. Goal should be I'm getting aggressive back here. I'm catching the higher probability part of that push. And then in one way, shape, or form, I have to guarantee that whether from there Tesla goes to 550 or all the way back to 200, that endeavor was profitable. For my trading business, that was a profitable ordeal. So for the Apple trade, even though the squeeze just fired, and yeah, most times that points towards you got more gas in the tank. We're getting closer to that green line than we are to that 21 EMA. Which to me would mean no matter where Apple goes from here, if I've done my job, I've got some profit to my name. We're buying it back here. We're catching the initial push. Now we're at the point in time where I got to make sure I'm paying myself. If I've got 10 contracts, I can sell 9. If I'm up $1,000 of profit, I can take it. Then I can take $100 of that profit. I can take $500 of that profit, roll out into a cheaper, further dated out the money call. Just have to make sure I wake up next week and Apple is a $230 stock all of a sudden. I'm not giving back all the gains. So, yeah, I like your thinking, Robert, and that's the thing you got to take into consideration up here. We could get back profit on Apple, not from a big pullback, but if Apple just goes sideways for 5, 10, 15 days. Which, to be honest, I wouldn't hate that. We probably would get a brand new daily squeeze. But yeah, no matter where Apple goes from here, we want to make sure we can look back and look at that move from 220 into 250-ish and say, hey, I did my job. I got paid on that. Anything beyond that is additional cash to play with. What you can't do is you buy an Amazon back here at $1.90. They break it out, squeeze fires, takes you directly to your target. And then on the quick flush, we're getting caught with our pants down, giving back all the profit. Buying calls, buying more, buying more, buying more, buying more. And the irony is, I've given back all my profits on a dip like that. Amazon has done nothing. Right? Like Amazon could pull back to $200. The thing still looks really bullish. It's just these little breaks in the action. You're buying calls after a 5-week rally. They're all kinds of pumped up. It all evaporates pretty quickly. Yeah, Roman. Yeah. The moving my friend story. Exactly. Yeah. So funny thing about that, I had to help a friend move last Thursday. And I had that in the back of my mind all day. I was like, all right, I'm not taking big trades. Like I'm not going for a repeat of the Jeffrey situation. All right, guys and gals, couple more names here. I saw one of you calling out Snowflake. To me, Snowflake is in a hurry up and wait kind of spot. Firmly above that 21 EMA with a crap load of lower time frame buy signals, I'm going to want to buy it. Nice pop, nice push, reversion to the mean, good hold. They get a bunch of buy signals going from here. I don't know, could make for a path back up into 185, 190. They end up back below that 21 with momentum breaking lower, and then you're getting a bunch of lower time frame sell signals. Could make for a gap fill, could make for a decent flush. We're a little bit too much on the edge and way too neutral. I think they try to call for either or right now. All right, I think I'm all caught up in the essentials room. We jump over here to the YouTubes. GE and AI. Yeah, definitely. I think GE is also in a tricky spot. We're getting -7 on the scoreboard, so Bears got a little control here. Let me look at the weekly. This probably won't do you any favors in the short term, but it might help you out bigger picture here. They got a brand new weekly squeeze going, and right now I think we're caught between two really important levels. Where, in the context of a weekly squeeze, they begin to trade much below that weekly 50. Then I think the odds begin to increase. I know they might want to try to break that squeeze short. In an uptrend, in a squeeze, if they're back above that weekly 21, then the odds are usually going to favor. They fire that in the overall direction of the trend. That takes a GE back to 200 and change. Short-term problem is, we could have another 4 or 5 weeks between the two without really getting too much more clarity. But yeah, I think into Q1, I'd watch that weekly squeeze develop there, and then AI. A lot of charts look pretty similar right now. Below that daily 50 with a bunch of sell signals, might be in a little trouble. Back above that 21 with a bunch of buy signals, probably in good shape for a push back towards 45, maybe higher. These little boxes between the two, they're tough to swing trade. Like, oh my God, we're breaking lower, I got to short it, and then they pop it. Oh my God, they're popping, I got to buy it. It's a lot of back and forth, a lot of killing of the premium. They're working back above here, right? All begins to lean a lot more bullish. They're working back below there. Probably a flush back down to that 200 SMA. Between the two could be a bit of a mosh pit. Hey, Big Rod, what's up, man? I hope you're doing well, bro. Hope your daughter's doing well, family, all the above, man. Good to see you. Judith, good morning, Judith. What's up, Big Terry? Good to see you, man. Big Terry, what's going on with those Lakers this year? I'm a Celtics guy, but I got a little Laker love for my man Kobe. Oh, speaking of which, Terry, I got my wife got me a black Mamba sweatshirt from a Nike store over the weekend, so I'm gonna proudly wear that out and about today. All right, Coinbase here. Another name where, in the context of a daily squeeze, I've got to wait for a lot more clarity. They're back above 300. They're cranking down a couple of closes back above the 21 EMA. All right, now I'm going to look for a buy trigger. Right, so get it back above 300, and then I'm going to look for permission to buy it. Back above 300, the permission to buy it would be 15-minute buy signal, 30-minute, hourly, 2-hour, all the above. Right now, we're neutral, 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 neutral with an hourly sell signal. If I'm more bearish on Coinbase, I don't want to short it at support here at the rising 50. So the short would be they're breaking that 50, a couple of closes below it, and then then a bunch of sell signals. And then I would say between 300 and 265-ish. Could be pretty noisy there. But all right, y'all, I got to let you go here. Got to go hit the road for a few. For those of you in my room, we are long GME. We are long TSM. Anything to do there, I shall let you know. I'll be back at my desk in about an hour, maybe an hour and 15. And then, yeah, for the rest of you, happy holidays, Merry Christmas. Appreciate all your time and effort this year. And yeah, finish up strong. As JC says, don't lose your ass on a Friday. Don't lose your ass before Christmas. And then my mission for the week here is, I don't think I got it up here. Yeah, I don't got it open. But I'm going to finish up my my 2025 trading plan document, which will probably end up being a good 50, 60, 70 pages. And then, yeah, when I'm done with that, I shall share it in the room, on Twitter, all the above. And then we'll kick off another year. So happy holidays, Merry Christmas, be safe, enjoy time with family, and I will talk to you all soon.